The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning, everybody. Happy Thursday morning to you out there. Let's see. Yeah, we've got the major indices still trading to the downside today. Just want to start out the show. It's been such a crazy week, and I know you all know we all have these, and I had forgotten to tell everybody I'm going to be at the San Francisco Money Show from tomorrow through Sunday. Now, most of the time I'll be in we're going to do a video studio, and I'm actually not sure where it's going to be. They've been doing these, for the most part, out on the show floor recently, which is a lot of fun because you get a whole lot more energy than when you're just in a studio off to the side somewhere. I think people are a lot more relaxed. It's just a lot more fun. And sometimes we do get audience questions, which is nice as well. So I will be there. That's at the San Francisco Marriott Marquis. San Francisco Marriott Marquis. So if you are in Northern California, please stop by. That's Friday through Sunday. I will be there. And definitely say hello. This is an interesting show. I've been to this one, the San Francisco one, a few times, and they get quite an interesting mix of speakers and folks who come out there. I'm going to be in the studio doing a lot of interviews, as I just mentioned, and let me see here. Let me pull up. I'll just take a look at some of the folks I'll be talking to. Yeah, Harry Dent. I know a lot of you know him. He's written quite a few books. Not a very optimistic fellow, that Harry Dent. Don Luskin, Ken Kam. Let's see, other folks I'll be interviewing. John Person. Let's see here. Jack Ablin from Harris Bank. He's a strategist, kind of gives the big picture view. Just kind of going down the list here. We've got John Buckingham, a fund manager. I may have had John on this show, I believe, because he is with Inialta, which is formed by Al Frank Asset Management, an advisory firm out in Southern California. And John is a terrific fund manager, always has a great perspective. What's interesting, where I was kind of going with this, was what's interesting about that event is that you just get you got traders, you get strategists. I'm just looking at the website right now. Steve Forbes is going to be speaking. So it's a lot of fun. Kathy Lean, who is a Forex trader, and you may be familiar with Kathy. She's on TV quite a bit, along with, as Tom O'Brien is one of the commentators there on CNBC. Kathy Lean is on there quite a bit as well, talking about Forex. So drop by. Interesting experience, and I would like to definitely say hello to you if you are going to be there this weekend. Stop by the Money Show booth. I'll be kind of popping in and out of that Money Show booth. I'm scheduled to be there for a few different times. I don't have it in front of me right now, but if you do stop by and I'm not there, leave your card and or tell me, or stop by. Maybe the folks can tell you when I'll be back. Would just love to meet all the TFNN listeners. I always enjoy that. I do run into some folks at some of the Money Show events, and that would be a lot of fun. So that's what's happening here for me over the next few days, heading out there a little later on this afternoon. So in the meantime, what I was kind of looking at today, we talked about IPOs in our last show. Next Tuesday, I have a terrific guest who's lined up, Keir McDonough, who is an asset manager out of Boston. If you listen to Ken Shreve's show, you may have heard Keir as a guest on Ken's show a few times. We both know Keir going back to the IBD days several years ago. Keir was a consultant back then, so we worked with him a bit. So we go back several years. I was just talking to Keir on the phone a couple days ago, and he is going to be a guest on Tuesday talking about IPOs. And he has a great perspective on the IPO market, what constitutes a good stock, when you want to get in, when you don't want to get in. So be sure to listen to the show next week, and we'll be talking to him. So today, what I wanted to do, and I've got a chart. We're going to look at just some small caps today, some perhaps recent IPOs, many of them. And when I say recent, I mean within the past maybe 10 to 15 years even. Although most frequently, I've noticed what kind of tends to show up on my screens of the leading stocks. Most frequently, I see these smaller cap names. And again, I'm not putting in any parameters for this. This is just what shows up with all my regular scans for fundamental and technical leadership. What tends to show up are companies that have gone public in perhaps 2005 or later. So you can see right there, you're getting companies maybe that are 7 years old or so, at least in terms of being publicly traded companies. So taking a look today, and just starting there on the IWM, yeah, we're seeing that little pullback in the market there. And of course, as we say many, many times on this show, how you do see the small caps can be kind of the canary in the coal mine there, showing you what's going on. Now, one thing, despite the fact that we are seeing these declines in the Russell 2000 ETF over the past few sessions, it's actually fairly orderly, and that's fairly in keeping with what we're seeing in the broader market. Just generally speaking, you're not seeing any kind of free fall. You really are seeing some of these pullbacks right now happen in a pretty orderly fashion. So just taking a look, yeah, you've got the IWM in a fairly narrow range as of today. So, we're not in panic zone yet. I tend to look at where some of these instruments are trading relative to that 5-day exponential moving average. We've got the IWM is about 0.3% below that right now. So, I kind of call this wait and see mode. Just kind of watching all of this to see what's happening. We did have on the decline here in the IWM, we had volume come in lower yesterday than in the prior session. And for this stage of the day, we are seeing lower volume again today. Now, of course, that could change. We've seen quite a pickup in the later part of the session in the past several months. So we'll wait and see what happens later on in the day. But as of right now, lower volume in that for this time of the day. Okay, so let's go back and talk about, just want to look at a number of these smaller cap stocks today. I have a number of screens that I run with various parameters, and what I did this morning was I ran one of the looser small cap screens that I have, and not to suggest that I'm not looking for strong fundamentals and technicals on this particular screen, but what I might be doing is kind of looking at some stocks that are in the process of correcting a little bit more. So not something that I would necessarily be putting just now in the low price leaders newsletter. Okay? And just in case you're new to the show, haven't heard, Low Price Leaders newsletter is the newsletter that kind of accompanies this radio show. We talk about small cap. We give you small cap ideas in that newsletter. We do have some trades on right now. Low price leaders, stocks between $5 and $12. That can be a very, very fertile ground for identifying stocks that have the potential to show much bigger price gains going forward. However, one thing that has been happening lately, and you will see this when you take a trial, you can take a free trial to the newsletter. You'll see this when you do download the newsletter and get your free trial. You will notice that right now, most of the watch list names and the holdings we have tend to be from the small cap world rather than the low price world at this moment. Now, that can and does change. You know, when you get into a kind of situation, we've had some of these tradable rallies recently, and who knows where this current little pullback is going to lead, if it's going to kind of bottom out here in the next few sessions and resume the uptrend again. Of course, we have a lot of chatter from the Fed, a lot of people playing the guessing game about QE3 right now. So you've got that kind of back in the forefront driving the market. You've got comments out of Greece. So you have kind of the usual collection of chatter and noise out there with all this potential to be driving stocks at this juncture. But a lot of times when you do see some kind of definitive uptrend, you will see some of these smaller names can be some of the best price gainers, and you can get in there and ride the trend higher. You know, sometimes that's most pronounced when you see the markets emerging from a serious correction mode, as we saw in March of 2009. And at that point, I can remember that so clearly. There were a number of those small, thinly traded, kind of speculative Chinese names that were some of those early leaders. And frankly, a lot of those are now delisted. But the corollary to that is, if you were trading the technicals on this and looking at the fundamentals, such as they were, trading the technicals on these, it was really not difficult, frankly, to see the early warning signals, get out of there, keep the majority of your gains, and not get taken down in these serious train wrecks that some of these underwent. Okay? So that was something that that I remember very clearly. We've got about a minute left here in this segment, so I want to get started on some of these smaller cap names that we can talk about today from, one of the screens I have with some of the looser parameters that we'll talk about today. Now, this is SourceFire, and FIRE being the ticker. This is a computer security firm. Maryland-based company, makes computer security software. Now, one thing that was interesting about this one, this kind of illustrates my point, actually. Back in that early 2009 era, maybe the first half of the year particularly, actually extending throughout the year, but mostly in maybe the first 8-9 months of that year, this really was one of those zooming growth stock leaders. And it's kind of, we've had some fundamental weakness in this particular name. It's coming back right now. Tell you what, I'm going to put a daily chart up. We'll come back to this after the break. I'm Kate Stalter. This is the Small Cap Roundup. Be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, we are back. And we've got the major indices still trading a bit to the downside here. We have lower volume on the NASDAQ, but higher volume with NYSE stocks right now. So that's where we're at. So I've got a chart up there. I left it up. It's called SourceFire, F-I-R-E. Now, this used to be one of the watch list names that we had in the Low Price Leaders newsletter. This is a small cap, okay? Comes from the small cap category, not the low price. It's trading a little above $50 right now, so that's not low price. And it has a market cap of about $1.5 billion, moves 732,000 shares a day. So, I mean, when I'm talking about good liquidity, really, you're looking at like 1 million shares or so a day. And you do have plenty of small caps that do show that kind of liquidity. This one is kind of middle ground, went public. When did I say this went public? I think I said 2007. Yeah, 2007. This one went public. Now, what it's doing here, let me put this up on a weekly chart for you on Tiger TV. Now, this is kind of interesting. I know that for a lot of people who are kind of accustomed to looking for some of the classic chart patterns, you kind of could see a double bottom on this one, where you do see right where I'm indicating it fell to a first low, kind of made a rally attempt over here. But see, it's kind of sloppy because you have this little midpoint here, kind of below some of the earlier resistance. Pulled back again. What I like about that second pullback is the fact that, let me get the cursor out of the way. What I like about this is the fact that you do see a situation where you had a lot of investors getting flushed out of this one. And that can actually be a very bullish indicator, because what it means is then you get some more of these fund managers who are very valuation driven, who like to come in there and buy a stock at what they perceive as a more attractive valuation. And that can frequently then set the stage for more price gains. Now, there's something else to kind of like about this one. Let's just see here. So you had, and again on a weekly chart over here, this one, I don't know if it goes back. Yeah, we're taking a look back here to that summer of 2010, so you can see that flash crash area. So basically what has happened is this stock has after rallying back from the flash crash, you see it didn't make a whole lot of progress for a long time after that. One of the good things about this one is in the summer of 2011, big decline. This one did not suffer nearly as badly as a lot of the small caps. So you did see quite a bit of investor confidence in this particular name throughout that summer 2011 decline. But nonetheless, you didn't see a whole lot of price progress, really none, for quite some time, up until pretty recently. So that's why this one has kind of reemerged on my scans lately. Looked a little bit more promising back in this area here. It's not on the more aggressive scans that I run at this point in time, but nonetheless, I do like the potential here. We are looking at earnings growth of 33% that analysts expect in 2012. That would be to 76 cents a share, 28% growth to 97 cents a share next year. Now, be careful. This is a pretty high beta stock, has a beta of 1.54, indicates some of the volatility that you could potentially see in this one. But you know what? That's frequently the case in a lot of the names that we talk about on this show and in the newsletter. And I do issue a lot of cautions about that kind of volatility and the thin trade and what that could potentially mean. Although 732,000, that's not really thin trade by the definition I normally use. Be careful though. It's still that's still in the zone, that under 1 million zone, where you do have to utilize a little extra caution. So this is one that I like the potential right now. Not supposed to probably report its next earnings until late October, so you've got a little bit of time to watch this one, and it could offer an entry point before that occurs. You've got, another couple months. All right, give a call, 877-927-6648. Talk about some stocks, some ETFs, whatever you want to talk about. I'll be right back with more small caps right after this.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back. This is the Small Cap Roundup. I'm your host, Kate Stalter. Give a call, 877-927-6648. Just listening to some of the promos there on the break, talking about a lot of the traders being on vacation. I think that is the case. And I think on the professional level, that does account perhaps for some of what you're seeing with regard to volume trends. Although, as I did point out, and let's double check this here, we are still seeing some higher volume today than yesterday on the NYSE. But of course, that's a day-over-day comparison, so you can't really draw any vacation conclusions based on that. We've got Labor Day coming up week after next. So I think traditionally after that you see a lot of folks returning. So, and again, the entire continent of Europe pretty much takes the month of August off. And with trading being an international venture at this point in time, you do see perhaps some diminished volume due to these lengthy European vacations that they get over there. Okay. I wanted to move on. I want to put up a ticker for a politically incorrect stock. Sturm Ruger, RGR, the gun maker. Now, this, not surprising to see sort of, politics aside. Let's just kind of look at trading trends here. This one had been on a very nice uptrend for several months. I had talked about it on the show many times. Despite being a company that gets a lot of attention, it's only a market cap of $820 million. Let's see here. I'm getting a question. What's wrong with guns? I was being a little facetious / sarcastic there, Axeman, about saying politically incorrect. Let's see here. We have a run-up of several months that ran up to a high of, let's see here, about 58.42 back in May, and then corrected. And, regardless of what you see going on in all the political election year campaign, chatter is a word I'll use to be kind about that, about the talk coming out of Washington and everywhere else in an election year. Regardless of all of that, when you do see a stock that runs up that much, not surprising to see that whatever the company makes, whatever's going on in the news, you are going to see some investors and traders decide to take some profits at that particular juncture. And this one here, this consolidation looks pretty darn good on this particular stock right here. Let's see. We have... if you have some of the traders who are kind of looking at some traditional cup and handle patterns, that sort of thing, you might be seeing that in here. I'm just kind of look at where this is. It's getting support at its 50-day line. It's below its shorter-term moving averages at this point. So that's something that obviously I would not consider this in any kind of buy zone at this point in time. Let's just take a look here. Now, there's also some fundamental cases here why you might be seeing some of the institutions decide to step back a little bit. Earnings expected to grow to $3.18 a share in 2012. That's a 52% year-over-year increase. But in 2013, that's seen easing a little bit, declining about 3%, nothing too serious, to $3.08 per share. A lot of reasons why that could occur, but I'm seeing very strong revenue growth on this one in the past year and a half or so. And again, a lot of analysts attribute that, and I understand this attribution, again, to some of the hot air, you might say, or whatever you want to call it, coming out of Washington. And if you listen to this show a lot, you know I'm always going to either poke fun or outright criticize some of the politicians. Not a big fan of what a lot of them say. And, you could even dig a little deeper and look at what some of the current administration is saying. But, it's relevant. Regardless of what you think politically, it can move stocks. It can move markets, obviously. As many of you know, I did work with Bill O'Neill at Investors Business Daily for a decade. And that paper is well known for its editorial page. And I remember very well, Bill would stand up there at some of the seminars, and he would talk about some of his opinions, and he would look at the audience, and he would laugh, and I agree with what he would. It was a nice laugh. He would say, "I know all of you don't necessarily agree with me, and that's okay." And that's kind of, that's who among us agrees on all this stuff all the time anyway. So there you have it. There's what we're looking at with Storm Ruger coming up on my screens here. Not a buy opportunity at this point. I'd like to see it back up above those shorter-term moving averages, and I want to see this kind of stop this decline and turn around and begin trading to the upside once again. So that's what we have on that one. Let's take a look at cars, shall we? And go to an interesting ticker here, LAD, Lithia Motors. Now, this is a car dealership. They're mostly in the western states. There's actually one not far from me, right here where I live, down the street from me in Santa Fe, New Mexico. They have both used and new cars. And again, this is kind of one of these cup and handle types you might be able to kind of discern in this chart, though I'm not necessarily looking so much for that kind of thing in a lot of these names, because so many of these smaller cap names, the way they tend to trade is rather than moving in some of these kind of traditional tried and true patterns, what they'll tend to do is often they'll either move up in fits and starts, and that's kind of what Lithia has done, or else they will just rocket higher. I'll show you one of those in just a minute, one that we've talked about quite a bit before. Now, let's look at the chart on Lithia here, and I've got this for you on a weekly. Now, let's take a look at what happened here. Let me just get the dates right on this one. So this was your summer of 2011 decline, okay? We all remember a year ago what was happening back here. So you see a lot right down here how this undercut this prior little consolidation that you've got right over here. And again, if you remember what I was talking about on the source fire chart just a moment ago, when sometimes you see this basing action in these stocks, it sliced through some of these key moving averages a year ago. Again, gave an opportunity, flushed out some of these investors. I mean, there was a lot of panic selling last summer. Just people were selling off everything. But nonetheless, what you saw in this time around, and that did not happen particularly in source fire that we were looking at, but I was just relating that to what you might be seeing currently in source fire. But what happened a year ago in Lithia is you did see that kind of set the stage for some more buyers, kind of trended along gradually. Here's that little fits and starts pattern that I talk about that you see in some of these smaller caps. So right now, pulling back, getting some pretty decent moving average support. Little bit of a pullback in the past few days. I want to go back over here to a weekly chart and just show you the tight trade. So there you go. You see trading patterns, even though we're showing a loss for the week of about 3.3% so far, you do see a fairly narrow range recently, and that's a good sign, particularly because this particular company has a beta. This stock has a beta of 1.91. So that's an indication that you are prone to some volatility in this one relative to what you're seeing in the broader market. Market cap here, 717 million. Moves about 477,000 shares a day. You know, I generally, most of my screens I'm running for trading volume of 300,000 shares or more in the average daily volume over the last 50 days, 300,000 or more. So that's normally what I'm looking for here. You get 477,000. That's, kind of, frankly, let's call it what it is. A lot of these tend to be in these kind of no man's land between being thinly traded and being more liquid. And that is just something you have to deal with in these smaller cap names. There can be a whole lot of potential, but not necessarily based on a lot of this high turnover. So I was just talking about, the other thing you tend to see in some of these smaller names where you see a stock that just rockets higher. And let's talk about Nation Star Mortgage. Now you see what happened here. This is one of those. I've shown you this chart quite a bit. This has been a watch list name on the small cap list. Now right now, the market cap here, little bit out of what I track for on the small cap names. It's got a market cap of $2.3 billion. So I'm normally screening for those that are about $2 billion or less. I know in the S&P 600, the Russell 2000, you're talking about stocks with a market cap of $3 billion or below, and a lot of the funds that do mirror some of these indexes, that's where they will enter their positions below that $3 billion level. And of course, I've talked to a lot of the fund managers about this. They're not just going to be selling because it hits that market cap level, but they do have all their valuations. They do have all of this going on, and a lot of times that will drive some selling. Right now, again, kind of not terribly surprising. This did take a little breather back in here and pull back, then rallied a little bit more. But nonetheless, it's had a tremendous run-up since its IPO in March. So, let's see, it was up 1, 2, 3, 4. It's actually working on its 5th month in a row of upside trade. So really not surprising to see. You've got a bit of a sell-off right now. Let me go over here to a daily chart for Nation Star Mortgage and show you what's going on with this. This is right now almost 3% below that 5-day exponential moving average. It closed 2.5% below that line. Actually, closed 2.5% below that line yesterday. So, that's the kind of point that I will often use as one of the trailing stops in something when I do see a big gain. If you see it closing more than 2% below that 5-day EMA, that's a sign that you might just want to get out, pocket your profits. If it's a stock that you have owned for months, and that's quite possible, you have a large cushion in the stock, and you're able to sit through some kind of moving average correction, in that case, it would be okay, as long as you continue to see support at or near some of these key moving averages. Personally, I don't like to, in something like this, that's a little smaller and more volatile, let's see, I don't really like them. You can just kind of eyeball this one, especially on a weekly, and you can see that this will be prone to a little bit more volatility than some larger, more liquid names. I don't like to sit through a pullback all the way back to the 50-day on something like this. You just don't know where it's going to go. I mean, if you're talking about something that's widely held, that's a Dow component, that's a dividend payer, in that case, you have a little more latitude to sit through some of these corrections potentially. If you're still holding Nation Star and you got in on this much earlier, maybe there was an opportunity after that IPO back in the middle of May to get in on this. Maybe at this juncture you could be sitting through some kind of pullback in this one. But if you came into this one more recently, maybe got into this trade after it bounced off of its 50-day support earlier this month, let's see, that would have been just earlier this month, then you may want to pocket some of your gains, because that's a shorter-term trade that you might want to get out of a little bit quicker just to protect your capital in this case. And particularly with the major indexes under some selling pressure right now, it adds a little bit more risk to it, frankly. Okay, we've got one more segment coming up. Still time for call, 877-927-6648. Be right back with more of the Small Cap Roundup.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back. Last segment here of today's Small Cap Roundup. Let's see, I'm going to put a different chart up here because I'm going to talk about energy for just a moment. Okay, so this is EQT. Let's see. Actually, I put the wrong chart up there. EQM is the ticker I wanted. The company is EQT Midstream Partners. Now, this is a recent IPO from the energy sector. Went public at 21 back in the later part of June. So you can actually, you can see the entire run up on here. You can see this has traded pretty nicely. So this is actually a Pittsburgh-based company. Market cap $931 million, moves 370,000 shares a day. Looking at a decline in earnings for fiscal 2012 to $1.43 a share, but that's expected to jump 42% to $2.03 a share in fiscal 2013. And what this is one of those transmission, pipeline, storage companies, very, very common in the energy industry. Natural gas is the particular subsector there that this company is operating in. and nice track record of revenue growth and earnings growth. The reason that I wanted to pull this one up, and let me just take a look here. Let's get this. I've got that for you on a weekly chart. Let's just take a quick look at a daily chart too, and just talk about. Now this is consolidating a little bit below its high of 27.35. That was from Monday. Pulling back, it got support at its 15-day moving average right now, a little bit below the 5-day, but above the 15-day. You know, this is one that could be in some kind of buy zone at the moment. It's trading just barely to the upside today. It reversed off some earlier lows, so that's not so great. But if we saw the general indexes showing some definitive move to the upside, and this one continues getting support at those key moving averages, could be a good buy opportunity in the next few sessions. But I'd like to see a little more strength in the general markets before I do make an attempt to enter any of these right now. Now, as you may know, one of the things I follow is IPOs. You want to check out the homepage of TFNN.com because we do have our IPO report is still up there. You can download that for free and just get some ideas about some of these names that went public in the not-so-distant past that could be setting up for some very good gains in the months and years ahead. Even if they're correcting right now, keep an eye on them. A lot of good potential out there. You know, we talk a lot about Michael Kors, K-O-R-S, from the apparel, luxury retail sector. That's a recent IPO that's really going gangbusters. Let me just tell you, Summit Midstream has filed for an IPO. I don't have a chart for this because it's pre-IPO. Summit Midstream is another one of these limited partnerships in the energy infrastructure sector. They filed on Tuesday. They want to raise about $302 million in their IPO. They booked $138 million in sales for the 12 months ending June 30th. Plans to list on the NYSE under the symbol SMLP. So obviously they've got to go through their road show. They've got to get the institutional investors on board. But that's another one of these energy limited partnerships that's in the pipeline, so to speak. I've got a few different book runners here: Goldman Sachs, Merrill Lynch, Barclays. Okay, we'll be looking at IPOs all the time. Listen for the show on Tuesday. We'll have our guest Keir McDonough talking about IPOs. Have a great weekend, everybody. Stop by the Money Show if you're in San Fran.